All right, Ra. What are we talking about today?
We are talking about the BLS jobs report that came out last Friday. So, what was that? The first?
Bureau
August
of Labor
1st.
Statistics?
Yeah, big old lion sacks a sack. That's what it is. That's what it should be called.
Big old lying sacks.
Big old lying sacks. That's, I think, what we should start calling it after what we discussed today. So, I know in prior podcasts, basically all the last 2-3 years, as we've been talking about the drivers of mortgage rates being higher, it was the dual mandate, labor market, and inflation. And recently, a lot of economists have talked about the labor market actually playing more of a role in the Fed's actions going forward on their monetary policy. So either holding interest rates or cutting them. And we've talked about how there's always been these big revisions, and it seems too suspicious, the unexpected strength in the job market that we've seen the last couple years.
Mm-hmm.
So
okay, put that into like English. Basically, Fed was watching inflation and watching the jobs market
to control whether or not they were going to cut interest rates or maintain or even increase policy.
Which makes sense.
Mm-hmm.
I mean, there was multiple years we were talking about inflation. I remember you and I would wake up early and just watch for that report to come out to see what inflation was doing. It was like our main drivers of what we were seeing in the market.
Because we were hoping for the big
praying
news to bring interest rates down.
Yeah, because we just saw rates go up so fast.
Mm-hmm.
But then it slowly transitioned into the jobs market.
Yeah.
Because as unemployment goes up, the Fed saw that, okay, if people are losing their jobs, that means they're spending less money, which then affects inflation. Makes sense.
Right.
Now where are we sitting?
So I know, again, we've discussed this, and the economist we follow has been calling this for just as long as we have. I mean, obviously, this is where we get a lot of the information from. But we had always discussed the suspicion in like how every month that they release these jobs reports, and the BLS is the one that's the most respected, the one that the Fed will generally make their policy decisions from. We would talk to our clients. We talk to clients' friends of friends, people we know, and we were hearing about people losing jobs and it being difficult to go find new ones.
And then we get a new report, and it was still looking good. It's
250,000 jobs created in a month, and it's like,
well, that was bad for rates because the markets were just anticipating the jobs report to be a little bit lower, and then we get a headline showing that jobs are actually on the up and up, and rates would take a dump.
Yep.
Which is frustrating for our clients as we're trying to advise.
Right, because every month we'd be like, there's no way, especially when they enforced Doge even this year. Mm-hmm. They were like, with all the government cuts, like eventually you're going to start seeing unemployment tick up, and I think that's what's going to be the movement of rates officially coming down and the Fed needing to cut their interest rates as well. And we kind of looked like idiots, right? A lot of people looked like idiots because we kept telling everyone. It was so
frustrating, especially like when you would advise a client.
Mm-hmm.
I guess I would never tell them to lock or not to lock. I would leave it up to them, but I wanted to make sure they were making the most educated decision. I'd be like, well, there's a report coming out this week on X day, and we're expecting X amount of jobs to be lost.
Yeah.
And then it was completely opposite.
It was a complete opposite.
Mm-hmm.
There were hundreds of thousands more created.
Mm-hmm.
And so Friday was the official shine through the BS.
Mm-hmm.
And
well, before we dive into that, though, what would happen is there would be revisions later on.
Yes.
And these revisions would be, we messed up. There was actually X amount of jobs lost.
Mm-hmm.
Well, unfortunately, the markets don't react based on revisions.
Yeah. And that's exactly what happened on Friday.
Okay, sorry.
And then that's what kind of led into the director of the BLS getting fired, them hiring somebody else, which could maybe spark different methodology in how they calculate these job numbers every month, which hopefully are more accurate than right now, because it just seems like they're just pulling numbers out of thin air, which they are in a sense, and we'll get into that. So let's start with the revisions that they released in the most recent report. So hang on, I'm pulling up the data here. In the months of, May and June alone of this year, there were a combined revision downward of 258,000 jobs. So a removal of those creations that they reported in May and June, which is frustrating because interest rates would have reacted much differently if we would have gotten the accurate data. So
we were already on a downward trend in those months. So could you imagine the impact? It could have doubled the impact.
Yep. So the actual average of, considering the revision so far of 2025, the actual data per month of job growth is actually 77,000 jobs lost per month, not a gain. So we hear this commentary all the time, and I know the Jerome Powell gets on the stand every time they have these Fed meetings and mentions the unexpected strength in the job market, and it's like where is the strength coming from? Because as of this year, every month we're losing jobs. And unemployment should be a lot worse than what it is. In Q4 alone of last year, they cut or revised lower 170,000 jobs in quarter four. So the problem with the revisions is markets don't trade off of the past. They trade off of headline data. And that's the reason why we're not getting these rallies in the mortgage rate market. And frankly, why the Fed continues to not cut interest rates is because of the falsified data. Or I guess maybe it's not falsified, whatever. That's probably more the conspiracy side. But obviously something broken in the way that
it's either the way that they're monitoring it. Who's to say it's not being falsified? And I don't want to spread rumors or anything of that nature, but something has to change because this can't keep happening, or they need to delay the announcement of it. It has
Somebody's
to be
got an agenda. I don't know what it is.
Within what it is, because
they have to fix it.
Yeah.
Which would explain why someone was fired. And part of the problem is the birth-death model. And I actually had to do a little research on this to fully understand it. But essentially what it is, to really break it down, is the Fed or the BLS takes jobs or businesses that were created, new businesses, and they assume the number of jobs that were going to be created from the new business. So they don't actually get the data.
The BLS jobs report is not actually counting new jobs. Like
they're assuming with the birth-death model of new businesses created how many jobs that will add to the market, and then they go back and look at it and they're like, oh, actually, they didn't add that many jobs, or maybe the business closed down or whatever.
So that's part of it.
So that's a big part of it, which is silly. I know Barry Habib has talked about the birth-death model being something completely stupid, and they should remove it entirely from the calculation.
That's because when I heard him say that, it's kind of something that always went over my head, but that makes sense now.
Yes. So hopefully that goes away, because that's obviously one of the biggest issues of this. Now, there's something that was actually really interesting, and which has been happening for the past couple of years too. We've talked about this, is full-time jobs being lost, but a lot of the gains or offsetting the losses actually as of this year is part-time jobs. So strengths coming from gig work or second jobs, essentially, which is a signal that the economy is not in great shape, because people need to pick up second jobs. I mean, I doubt they're doing it just as a gig, as a hobby. They do it because they need to survive. We need to pay the bills.
Buy groceries, for hell's sakes. Well, another thing is I've had clients and friends and family that have lost their main gig, which was a pretty good paying job, and had to get two jobs.
Does your home and auto insurance seem to go up every year without fail? Mine did too. I thought this was just the way the insurance industry worked until I found my friend Alan Johnson with American Family Insurance. After more than 15 years with the same insurance agent, he saved me over $3,000 per year when I switched. I refer all my family, friends, and clients to him, and their experience is similar. Great rates and a great experience. Call Alan for a free quote today at 801-708-2962.
To combat the income they lost. So now that looks bad on the jobs report because they traded 2 for 1, which is definitely not the case.
It seems like we're taping together a narrative, really, with full-time jobs being lost, but part-time offsetting some of the losses. Which, if we just accounted for full-time jobs,
do you know what about seasonal stuff? Is that accounted for in?
There is
BLS?
Seasonal adjustments. Gotcha. I know that. I don't know exactly how the data works, so I'm sure that part actually helps with the accuracy of the data. But nonetheless, obviously there's issues
cracks,
here, and the problem is it's trickling into the administration and a lot of these companies that provide the data that the government makes decisions off of, like, they're losing credibility.
Mm-hmm.
And that's why one of the Fed chairmen stepped down. Like, I think there's a credibility issue.
Mm-hmm.
And that's why it's tough to even say and make these predictions like you could in the past, because we've never been in a situation where we've lost credibility like this. The most respected resources, right?
Yeah.
Supposed to be coming from government endorsed companies or institutions or entities, and they can't even be trusted anymore.
This could be a positive thing, though, if we kind of get our act together and we figure out a legit way to report this. Because if we get the true findings, this could be a game changer for people that were looking to buy, or if you bought in the past couple of years with a higher rate, this could be an opportunity on the horizon to refinance.
Yeah, and maybe, who knows? I mean, obviously we've learned our lesson. We don't want to.
Right, I'm not going to say it's going to be happening months down the road. I'm saying this could be something that could have impact.
Yeah, but maybe this is the turn. They start actually,
especially with the spotlight that you guys talked about a couple weeks ago with the relationship between Jerome and Trump. Mm-hmm. There's definitely a spotlight on this sector of the economy right now, which I think is definitely needed.
Yeah, 100%. So yeah, I mean, we can't help but feel frustrated knowing that all this data that has been the influence of our jobs, of clients' payments, of the economy itself, is all based on inaccurate data. Mm-hmm. So that was pretty profound, knowing 440,000 full-time jobs were lost last month alone. I mean, that's ridiculous. That's crazy. Yeah. And there's another signal that things are continuing to weaken in the labor force, and it's the participation rate of the household surveys. So, meaning like you can only participate if you have a job. That number's going down. So clearly that's showing weakening in the labor market. The household surveys showed 260,000 job losses, which really is what ticked up unemployment on Friday, because it went up 0.1%, just barely under 0.2. It almost swayed to round up to 4.3%. Mm-hmm. So it would have gone from 4.1 to 4.3, which is a big deal. It's 0.2%. You and I, anyone would look at that and be like, crazy. Exactly. I mean, if that trend continues, you could see how ugly that could get by the end of the year. Mm-hmm. And especially with how many people that surveys.
What I think will be interesting is how the Fed reacts to this, how they analyze it, because we don't want them to be acting too reactive, because by the time they make changes, it could really hurt the economy more. But then again, they're in a weird situation, because if they act too soon, inflation can come roaring back.
Yeah, and I understand that obviously they've got a way harder job than we do. Mm-hmm. And so we can't not acknowledge that part of it. The issue is they have no issue looking in arrears to make their decisions, but they have no forward thinking. Mm-hmm. Like, for example, even inflation. There's something that there's a couple of the Fed chairmen that have called this out as of recent, and they're the ones who actually had been pointing out the labor market weakening as well. I think it's Waller and Bowen is who it is. I'd have to confirm that. But they had mentioned too in the inflation aspect that tariffs are a one-time increase to prices. And so you strip that out, that accounts for the estimation was, and I think this was from Bowen, was 0.2 to 0.3%. So inflation, the core CPI inflation rate, 2.8%, should be more so around the 2.5 mark.
Interesting.
Which is significant as well.
Yeah.
And they're noticing this and they're calling it out, and that's why they had called for 25 basis point or 0.25%, 0.25% interest rate cut at the last meeting, and are obviously calling for cuts going forward, is because they're a little bit more forward thinking.
Which is what we need.
Yeah, exactly. It's too late if you're looking in the rearview mirror, which is what continues to happen. But I just can't figure out why, if they're looking at data from a rear, why are they not acknowledging the revisions in the job market? It just doesn't make any sense. They
analyze everything except for the revisions.
It's like they're just turning a blind eye to it.
Yeah.
Which they've openly admitted in multiple meetings that labor market actually is a little bit more of an influence on their decisions going forward. So what is it?
Yeah.
Personal agenda. I mean,
obviously it's going to have to be a topic moving forward now that there's been a job loss from this.
Yeah. Yeah, it's crazy. And I think it was the commissioner, what's her name? I think her getting fired, who knows? Maybe that's the change that they need. No one really knows until they have someone to fill the spot and they come up with next month's report. And
only time will tell. I mean, you guys know we'll be here analyzing and keeping you guys up to date on how this plays out and what rates are doing and how they react based off of it.
Yeah. Yeah. I mean, just other crazy facts here, dude. If May and June only produced, so this is after the revisions of this year, 19,000 and 14,000 jobs within both of those months, do we think the Fed would have actually held rates on last week's meeting? Probably not.
Well, what percentage difference is that? Do you have that by chance?
Well, it's 258,000. I mean, dude, I don't know. You're going to have to quickly calculate this math. I probably should have been prepared for it.
258. What's the...
Well, it's like 90%, dude. I mean, it's like it was a massive revision.
Yeah, that's
258,000 jobs.
They're definitely
where they're only 19,000.
They would have to. You'd be crazy not to.
Right. Yeah, they would have cut. And that's the thing is those little, they seem insignificant, and obviously the markets are treating it that way because it's not headline data.
Yeah.
So it has to stop at some point.
Interesting.
Bond markets react immediate and not initial to the initial headlines. Yeah, I mean that's the reason we are.
Well, I mean, on a positive note, we've still seen rates come down. Mortgage rates come down a good amount the past couple of weeks.
Well, because I mean, it started on Friday from the BLS report.
Yeah, we'll take all we can get right now. Hopefully that they start looking at this a better way. And if we start getting some real numbers, this is only going to go more in our favor. Now, no crystal ball, but we'll keep you guys updated.
Yeah.
Anything else you want to add?
Nope. I mean, the biggest takeaway is stop trusting headlines.
Don't take anything at face value nowadays.
Yeah, if you want to follow this going forward, follow revisions and household surveys. That's going to tell you more of a true picture of what's going on in the job market. And gosh, I mean, question why bad data is allowed to have such a major influence on
every single American policy. Every single American.
Yeah, it's crazy.
Yeah.
Who knows?
Wow. Well, thank you guys for tuning in. Please remember to like, subscribe, comment, and we'll catch you guys on the next one. Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.